Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. And in case you were wondering, absolutely amazing here on the coast. I hope it is a beautiful Friday or weekend for you guys wherever you are. Today's video is massive. When are they not massive? But today, most importantly, we're looking at the collapse of the US dollar. It is continuing and we're seeing some really strong closes leading into the end of the week for the traditional markets, the biggest stuff. I know we're here for Bitcoin and cryptocurrencies to make 100x's and all that sort of jazz, but this is the stuff that drives all of the market, whether we are going to be in for a tough time or a good time. And of course, the major sentiment out there is that there is further collapses to come. The world is really in a very, very dark, bad place, etc., etc. Okay, we don't need to go down that path because the money that is in the markets, that's what we're here for. We're investors. We're not emotional support teams for the everyday average person, which is absolutely fine. If that's your job, that's what you do. But we're here as investors. So we really have to split those two things up and understand what it is that we want from the markets. Do we want to help people with their emotions or do we want to make money from the markets? All right, guys, if you want to make money from the markets, smash up the like button and subscribe, bell notification icon. We are here putting the pieces of the puzzle together during this economic collapse. First things first, let's take a look at the S&P and where it has closed. 14.6% up from the October low, which is approximate time period that we've been expecting a low. You know, we did talk about a quarter three, quarter four type of low at the very worst, maybe or best, end of quarter two. And fortunately, we did see a low at the end of quarter two, which was the June low. And now we saw the October low and the market has basically bounced away from that point. Just as a reminder to this every single time, because these days can get very hard when we get those periods of the market tanking, I suspect we'll get some resistance as we approach our target level of 4,200 points. Now, as the market starts to come back down, all of those fears from the past, even just the recent past, August, September lows, the stuff that's happened in November, especially around Bitcoin, this is going to resurface and question people and question your particular position in the market. So I'll come back to that should we get to that point in the future. Probably December, January period is usually when it happens, you know, after the Christmas rally, and January usually has a bit of a pullback. So that is going to resurface. Emotions are the most difficult. So far, S&P, things are closing above the levels. This is looking really, really nice at the moment. We had 2 days close. Remember, we always want to see at least the week close, which is what we had. Normally at least 3 days. It doesn't mean it's going to give us the 100% guarantee, but at least 3 days really starts to turn this in the favor of the upside. We're not far away from the target here around 4,200 points. We're sitting at 4,000 points now. That was the top that we just hit. So 200 points away from this target now. And hopefully the market remains above the October low leading into December. That mid-December time period is what we're awaiting for. That is going to be a good bullish flip signal, one of them. So S&P, things are looking nice and strong here. S&P is outperforming the tech sector. All right, so this is the NASDAQ. The NASDAQ, fortunately, closed above its 50% level here, 11,768 points. That's a major 50%. That goes all the way back to the top and the pandemic low. So at least that's one starter there and above these previous resistance levels at 11,600. So this is good for the tech industry right now. You know, at least people may be looking to take profits again as the market rallies. I think there will probably be some more downside to the tech sector, especially obviously the NASDAQ. And if there's not further downside past this 10,500 point low on October 13th, then it'll probably churn away at those lows for a lot longer than the S&P. And that is shown here nice and cleanly on this chart. This is the SPY versus the NASDAQ. So the strength against each of the indices. Now, this is a chart going back over 20 years. It can bring it all the way back into the 80s here, so 1985. But the area that we want to look at most importantly here is March peak. So this is 2000, and then the 2002 top as well. So the NASDAQ plummeted. Obviously, this was the .com bust. And then the S&P obviously was not losing as much money. And this is the sort of period that I believe we're in now. And that's where you can see on the chart here. So I do expect that the S&P will continue to outperform the NASDAQ. And you can see it cleanly on this chart here. That's what happens. And then over the course of the next stage of the cycle, back into the first half of the real estate cycle, which is likely sometime after 2026, then we start to see the NASDAQ start to pull back those gains again, okay? So that's what has happened during this period again. In the short term, looks like the S&P is going to outperform the tech sector, and then we'll have a little bit of a pullback, and maybe we'll break above this particular level right here at 0.37. So on to the next major thing, the US dollar. Amazing collapse going on right now. This is the biggest fall. Now we can say now this is the biggest fall that it has had during this entire run up since January 2021. So nearly 2 years. This is the biggest fall it's had from the top. Now I've gone back and measured just some of the other falls that's happened in the past to see if we can start to make some targets for this current fall, to see if we are then falling more for longer and more in price than the previous falls, which would then just lead to more accumulation, or basically a longer period that the US dollar is going to be down. And hopefully that gives some relief to the commodities, and it starts to allow cryptocurrencies to start to shine again into another bull market. But this can take some time, as you'll see from the chart here. So the US dollar peaked in September. We covered that a lot. I went on and on about it. Extreme news. All the people that were saying it's too early, there's a lot going on. US is going to come back and destroy everything, and all the rest of the country is going to collapse. I mean, you don't really hear from those people anymore because of what has just happened. Remember that extreme news always happens at the extremes. The most extremes always happen at the extremes, and it's almost 100% the opposite to what you need to do. There were a lot of people buying US dollars at this top because they were scared of their currencies collapsing. And if they were to buy US dollar at that tops, they were buying USDs, selling their euros or their pounds or their Aussie dollars, Canadian dollars, whatever. Now you've just lost 7% on your money from that peak to the current low, and the market did close at the low. So really pay attention. If you only watch the news, try to do the opposite to what the news is saying at those extremes. So I'd say if this is a top, not the top, it's not confirmed yet, but it is looking likely that this will be a very significant top for this part of the cycle here in the US dollar. The US dollar could be down or below the high for approximately 10 to 14 months. And that comes from these previous tops here. So you got the top to this low, that was approximately 13 months, so just over a year. And this other top here in March 2020 to the low of January 2021 is 10 months. So it's 10 bars here, 10 months. But if we go to the next lower bottom, that's 14. So it's basically at those lower levels for 14 months. And this one was 13 months. And so if we're down for that period, that then leads us into the end of 2023. That could be a lot of relief for the cryptocurrency markets, and just allow us to form our own bottoming process in cryptocurrencies. Maybe some accumulation continues on and we start to climb a little bit higher. Now in future videos, I'm going to go through this in a little bit more detail, but you're most welcome to drag up a chart of DXY and just look at the timing of this particular cycle here from the May period to this May low. So you've got the top that happened on Bitcoin in 2013, and then the US dollar gained strength, and you got a bear market happening for Bitcoin, whereas the US dollar is strengthening, and then you have the accumulation and then the dump. And so maybe we're going through that again. This sort of 4-year cycle is somewhere embedded in the US dollar as well. Not exactly 100% on point, but there are some things to learn from this chart. And I'll go through that in future videos. Otherwise, this video is going to be extremely long, and I already do 20-minute videos. So Bitcoin futures market, we're on the monthly chart here. It is looking a little weaker than the spot market. Obviously, we're now closed. The end of the day has happened. Friday's closed. The traders in the futures markets have gone home. The weekend's here. Maybe we get some time to relax, go out to the beach, enjoy ourselves. Unfortunately, if you're in the northern hemispheres, you got to find a way to warm up or enjoy yourself. Okay, so the lows now are at $16,000 for the Bitcoin futures here. That's where we currently sit, 16,050. The major low here is 14,900, and this market is really trying to put in a low here. So nothing is confirmed. You can see we've had two inside bars here on the daily. So we've got the top and the bottom. The bottom is higher, and the next bottom, today's bottom, is higher as well, but the tops are also lower. So these are just compacting because of the volatility over the last several days. We need to come back to something that's a little more normal for the market before it can start to decide whether we head higher. So like I said in yesterday's video, the key level for this market is to get back above those lows. And the October low was the current low for the futures market on Bitcoin, and that's at a figure of 17,000. $800. So a nice close above that is good. And then this yellow line is where I'd love to see this market begin to form another base, which is $18,500. And so like we're putting together the analysis of the Dixie, there's a lot of the steam coming off this market. It's some of the biggest drops here, 8.36 points on the Dixie, the US dollar. That's the biggest drop it's had, which would probably lend itself to further either consolidation here or further downside, which the next level is 104. That could then bring a lot of relief to Bitcoin and cryptocurrencies. So like we covered with yesterday's video, as the market was closing for BTC on the spot market, so not the futures, but the spot market, the markets that we all trade, it really got close to closing just above the good level. You can see the battle that's going on here with the previous low of June. So that's the 17,600 low. If you want a more specific number, go back to the 18th, and that low is 17,585. So round number 17.6. The market is battling that. The week closes in 2 more days, so 2 days to go to see if we can get back above that. But I like the fact that we have basically had a lot of volume at this low, and we have bounced a significant way. It's not the strongest looking pattern just yet, but a nice close above here or somewhere that gets close to it would really help. And of course, we've been covering the futures market, the end of week closes here. What tends to happen at the end of the week is that the spot market will come back to where the futures market closed off on Friday. So if that happens, it is looking rather weak for Bitcoin, at least in the short term here. The nice thing with this as well is that it's been the biggest volume on the weekly bar that Bitcoin futures has ever seen. You can see there, this last week was the absolute biggest volume that we've ever seen. The sad thing to this is that it closed low. So we really wanted to see this close much, much higher on this particular bar. So although it may not be that we are out of this completely, it does look like we're coming towards the end of this period, which we've talked about for a long time now. So I guess there's a lot of people hanging on for 10K. Others are looking to just get in while the market is under 20K. That's going to come down to your own particular plan at this point. But it is nice to see that the timing cycles have come together. As for the spot market, like I said, 2 days to go, 17.6. The other number to keep a lookout for is 18,600 as well, if we can start to climb above that. The cryptocurrency that's not looking as weak as Bitcoin is Ethereum. Ethereum actually got above the level of previous support. So it broke down and just got above it. We want to see multiple days close above this. I know 1 day is great, 2 days is great, but obviously 3 days is even better. And right now it's just starting to sink a little more, and it's the weekend. So we're not probably going to see any good strength come into the market until the volume picks up again next week. But at least this is looking stronger. We didn't break down our June lows like Bitcoin did, and we closed above the previous level of support. For Ethereum, Bitcoin, this is also looking reasonably strong. I'm on a monthly chart here, so a macro view of the market, and this looks like a significant shakeout to the downside, provided we start to close again above that 7.8%. So this dotted line right here, I'm saying where these tops are, that's at 7.76. So let's call it a round number of 7.8%. This is going to set Ethereum up again to try and tackle the 8.5% against Bitcoin value for the almost 4th time. So you got here the 1st, the 2nd, the 3rd, which was September. Maybe we'll go for this 4th time lucky and get that breakout like Gann has said many, many times before. So this could almost be the shakeout that the market was looking for, provided Bitcoin can get back above that 17,600, which would then lean towards what I've talked about before on the channel, saying that you can probably kiss that $10,000 Bitcoin goodbye, like I've got here, kiss your 10K goodbye. The low so far has been 15,500, and that low basically only lasted for a very short period of time. So you can see here the low came in on the 10th, and underneath 16K, we were only there for about 3.5 hours. So should this continue to form some strength, it's looking like that 10K is going to miss out. And would you want to miss out on a $15,000 or a $16,000, $17,000 Bitcoin for the sake of hoping that it gets to 10K? going to come down to your own plan. Ethereum, on the other hand, like we saw here, is looking a little bit stronger. We know the things to look out for. And should this close above, then this was one of the ultimate shakeouts at the end of a Bitcoin cycle, cryptocurrency cycle that we have seen for quite some time. And especially if this is reasonable strength in Ethereum. The other analysis that we said here, the NASDAQ and the S&P is climbing out of this low. So if things really start to turn around with the US dollar continuing down, the S&P continuing up, then that is going to bring a lot of strength back to the market. And also investors, traders may start to look at some more risk on assets now that we potentially have seen significant lows this cycle. Last thing to look at is the cryptocurrency market. So the total cryptocurrency market caps. You know what I'm doing with Bitcoin. You know what I'm doing with ETH. You know my position on the overall market when it comes to the stock markets, which biggest markets in the world, what happens with the US dollar. As for cryptocurrencies, they're not as weak as they have been in previous cycles. However, these are still the most risky asset out there. And I know everyone wants to get in and get their 100, 200Xs, try and buy these lows. Good luck to you. But if you want to play it safe, there is still no signal to be getting into cryptocurrencies. And if there's anything that has happened recently that you can take away for your own investing is look at Solana, look at FTT, look at everything that broke down from those significant lows because there was no signal, no confirmation that these things were gaining some strength to the upside. They did not break their monthly swing tops here from August. So this is the overall market cap we have without Bitcoin and Ethereum, and the price right now without stablecoins. The low came in at 306 billion, so stablecoins are worth about 150 billion. Minus that off the 300, it brings you out about 150, 155 billion. So that brings us all the way back down to the levels of November and December before the market broke out, which is a pretty good area of support for cryptocurrency. So there could be the bottom forming here. There's no confirmation yet, but it is a good sign at least, which would put the market down at 86% from the top. Previous cycles seen the market down 92%. Remember, this is everything minus Bitcoin and ETH. And then from that point, this is the patience game. Look at this blue one here. This is 15 bars from the first low of the cycle low to the next low, which was March 2020. And I think that low went just slightly lower. That was 15 months. And then to the breakout was another 4 months, so 19 months total. That's the first monthly swing breakout. Then the next month was 20 months. We had the retest 22 months later, and then the breakout on the 23rd month. So basically 2 years from the first low, we had some very significant signs that the altcoin market was on. Basically, almost guaranteeing that we were going to see an altcoin season. That is the safest point to be getting into the market. This one is pretty safe too, but this is the safest point here. So if you wanted to get into the safest time to get into altcoins with the absolute fastest gains, you can see that you got the gains within 2, 4, 6, 7 months, whereas this you were waiting 2 years, then that's the period you wait for. Do you have patience in you for the 2 years, or do you want to keep chipping away at it over the next 2 years in the hopes that that 1 or 2 or 10 particular cryptocurrencies you buy are going to make it next cycle? Because remember, in this previous cycle, not many made it through to that following altcoin season of 2021. A lot of the crap from 2017 didn't make it. Maybe yours will. I wish you all the best. Like and subscribe if you haven't already, and check out the videos that are popping up here on your left-hand side that go through picking altcoins for the next cycle. High risk, that's the video you want. Look at yesterday's videos as well. Guys, have a fantastic weekend. It's been absolutely amazing this week with your support, especially on the live streams. It's been super, super fun. I'll see you back here on Monday. Have a good one. Till then, peace out.